as we've become accustomed, the American president has loomed large in our discussions over the past few days, and he's looming ever more here, mostly for his extreme unpredictability. And uncertainty has long been the enemy of the global economy and international trade. How are countries, especially Asia, adapting? Who is best positioned to take advantage of this chaotic time? What will global partnerships look like as tariff policies continue to roll out? As reporters, you are always looking for knowledgeable people to provide context in these fraught times. And some of the best reporters I consulted when I was trying to, find folks to talk with you during this week, referred me to our next speaker, Trinh Nguyen. She is a senior economist covering emerging Asia at Natixis, based in Hong Kong. Trinh joined Natixis in October 2015. She previously served at HSBC as an Asia economist from August 2011 to October 2015. She was awarded Best Economist and top ranked for her forecast and expertise on emerging Asia by Asia Money. And Trinh is known to produce forward thinking and changing insights. She is unique in her ability to provide sharp analysis. She also has some sharp analysis for us as reporters. So I think you'll enjoy some of her observations there as well. So please join me in welcoming Trinh. There you go.
Okay, thank you. So I have an hour. It's your session. So the way I kind of tend to do these presentations is it's for the audience. And so what I prepare slides, I will go through them. But given that's an hour, what we can do is we can be a bit interactive. At any point during the presentation, if you feel compelled to say something, disagree, want to talk about something further, we can or we cannot. but that's definitely like an open forum. So feel free. I'm very easygoing. So you can interject and disagree. So I think the way I will talk about Trumponomics, about and its impact in the world, particularly Asia, is I'll start with tariffs, but it's not the only one. And I think after I go through the slides, I will talk about maybe perhaps the 3 questions I get all the time, because I've done these kinds of panels probably like maybe this is probably my 12th talks to all sorts of audience, from investors to seminars. So first, the presentation is followed in the order of tariffs and what that means, and what everyone else is doing about it. So when we talk about Trumponomics, I would say that before we get so fixated on tariffs, you have to think about what are his ideological ideas and what's shaping him. So the one question I got, I was doing something with David Ingles, anchor at Bloomberg, and the first question everyone asks about Trumponomics is, what does he want, right? To analyze Trumponomics, you have to ask, what does he want? And how is he going to get it? What are the tools he's going to use to get it, right? And the answer most people tend to say is, he doesn't even know what he wants. How can that be true if you're president of the United States? And since he's been saying it since the 1980s, he has a very strong conviction what he wants. And I'll start with trade first. He believes that an economy has to start with the real economy. How do we differentiate between a real economy and the financial system? So I actually have a sense of who's here. So let's say she's a financial journalist for Bloomberg. When people write for a financial newspaper, whether it's Financial Times or Wall Street Journal or Bloomberg, which I am a consumer of, they are very interested in one sector of the economy, finance, right? Finance is not the economy, right? Finance, the US financial system is much larger than its economy. I'll give you an example. Asset allocation to the US in the MSCI index is more than 60%. The US as a share of the global economy is only 26%, right? So the financial sector is not the economy. We are biased by you know what they say, the monk sees the world through his eyes, so on and so forth. We're biased of what we want to see. So what Trump sees is in a total disconnect to people in the finance sector, which we like that it's huge, we like that's influential, we like that it's growing, right? In the finance sector, we tend to care about corporates because corporates have earnings, they have stocks, they have debt, the US Treasury, right? So we're very focused in a very narrow path. The ordinary person is not interested in a lot of things that we care about. For example, physical goods. Not all the physical goods, the companies that own them, are listed in the stock exchange, for example. So there's an adage that says the economy is not the stock market. So for Trump, he's very focused on this. And there's one sector of the economy he's very focused on, which is the manufacturing sector. And that's since the 1980s, since you watched that Oprah interview, he talks about it a lot. At the time, he was pissed off about Japan and the trade surplus it has with US. And currently, it's about China, right? And why does he care about that? Maybe because he's a real estate guy and he's very physical in nature. He's a construction guy, right? Who knows what is shaping his ideology. But him and Xi Jinping, they're very similar. They care about the physical economy and particularly the manufacturing sector, particularly within the manufacturing sector, the industrial sectors, the sectors that are tied with security, which is steel, which is all these metals that we're talking about, rare earth, which is the frontier of technology. What's happening in Iran is all very related, right? The ability to go high in the sky, to intercept, all about high-tech security. So in a way, he's a hard power kind of guy. So when we talk about trade, what's happening, trade war negotiations is all very connected. And that, what he's doing is in total disconnect with the way things are running, right? The way things are running in the United States is a highly financialized system. The US manufacturing share of the economy has shrunk significantly. Manufacturing share of jobs has shrunk significantly. And the US has done pretty well, and particularly the financial sector, and particularly the services sectors and so on and so forth, in particular within service sector, the tech sector, right? The issue with the tech sector, which I'm from, is that as we all know, it's all about scale. They're very good at scaling. The problem with scaling is it doesn't employ enough people. So in every economy, we have the workers who are very skilled, right? No matter where they're based, they can serve the whole global economy. We could think Amazon is an example, where you can be based out of Seattle and so forth, you serve, but you can have people that don't speak any language, computing language, foreign languages, and so on and so forth, or credentials recognized internationally. They cannot move. So there are losers of global trade, even if the US has been the biggest winner of them all, particularly US corporates. So this is what it's about, Trumponomics. And he is disrupting the fabric of everything we care about. So when we analyze him, we have to start with that framework. That's what he's motivated by. And how is he going to go about it, right? He's going to go about his power comes from all sorts of weird different sections that's come through history of the US, right? So he has, in Trump 1.0, he used what we call Section 232, which is a sectoral section, right? That you use, and it comes, you have to go through a lot of analysis by the Department of Commerce, right? So, you know, Lutnick is under the Department of Commerce right now, head, and that takes a long time, right? Because then you have to consult with all the people working in the economy within the sector, all the people opposing it, so it takes a long time, usually 6 to 12 months, if not longer. A good example is when Trump came into power, the first time he imposed the steel tariff. It didn't come into effect until 2018. And then when he came in the second time, he didn't impose new tariffs. He just removed exemptions, right? Another one is another power that comes from for Trump is really the country specific, which he imposed severely on China, Section 301. He imposes it on China, and those two tariffs, they stay because they go through a very lengthy process. And frankly speaking, in the US, there's bipartisan support to go after China. So Section 301 and Section 232 is very deep in foundation, but very narrow in focus, right? Narrow in sector, narrow in country. So here comes Trump 2.0, which is a totally different guy, right? He, instead of being very focused on sector, being focused on specific countries, he decided that in the first term, China was able to kind of diversify and reshuffle and still find goods in the US anyway through other countries, right? And so what he's going to do is that because international trade is very global in nature, you cannot analyze international trade vis-a-vis just the US relationship with China. You have to analyze international trade vis-a-vis China's relationship with Asia, Asia's relationship, and so on and so forth, right? It's a global system. So then he says, well, let's listen. We're going to impose tariffs on everyone. And where does that come from? He used IEEP, which is the International Emergency Power, which is being widely contested right now, right? The federal court, it started with the New York Trade Court, and then now it goes to the federal. It's probably going to go to the Supreme Court if it's ruled against. And this one lacks, it's very thin in foundation, right? Because you have to come up with some kind of emergency. China fentanyl is part of that. He says, we have an emergency, we have a fentanyl crisis. Let's impose tariffs on Canada and Mexico, 25%, except for USMCA, and let's impose 20% on China, 10%, another 10%, right? And plus reciprocal tariffs, all under this. And all of that could evaporate if the Supreme Court rule against it. The question is whether it would, right? Would it want to go into something that's economic in nature or political in nature? Would it just leave it to Congress? That's a big question mark, and I think very tradable question right now in the market if you have an answer. But irrespective, all of these slides are to show that Trump likes tariffs. Tariffs are going up, and they're one of the tools he uses to get what I think he's motivated, which is the beginning of the presentation, right? So what does that mean? It means that there's a lot more going on. There's sectoral tariffs that's happening right now that he's like studying. Like I said, it's very deep. It takes a long time. So he is studying them. So watch out. They're coming to really change the world. And things are very linked. So sometimes you read a story that's very different, like the Li Ka-shing story on port. It's very linked to what Trump is trying to do with shipping, right? Shipping, in commercial shipping, China has dominated. It's about 50%. The rest of it is South Korea and Japan. In commercial shipping, what he's going to do and underanalyze right now is not just about ships, Chinese ship dock in the US, but the percentage ships that you actually own, right? And so actually what makes the difference is that whether or not the port is a US dock, a US port, and which is why this Li Ka-shing Panama thing is very interesting because it's a portfolio port. So if BlackRock, the company that's under, is successfully buying this, right, suddenly a lot of these ports are now American. So any company, not just a Chinese company, any shipping company that docks in any of these docks, and if this shipping thing goes through, it's gonna be absolute mayhem in global trade. Much more important than anything I've talked about. Why? Because the very thing that carries your good, if the cost goes up, it's like oil. You know, oil is the very thing that goes into everything. It's an oil derivative. It's a derivative we use to make fertilizers. The very thing that goes into everything. It can really, really rip the fabric of global trade. And it is a bigger friction in the sand than anything I have ever discussed. And which is why I think is going to be very interesting. So one of the things people like to ask the question is, what's going on with this port deal, which no one else has an answer, but it's very important picture. But there are many other things happening. So long story short, the global order, as we know, I'm going to skip this because this is a slide for investors, and I'm just going to go quickly about this idea and then going into what happens in the impact on Asia. So long story short, tariffs are going up. It's not just the things I talk about, IAPA, sectoral section, but section 232, particularly in shipping and so on and so forth, is going to be very important, so pay attention. And what does it all mean? It means that we sit here in Singapore, I sit in Hong Kong, and I'm Vietnamese, so all these big traders of Asia, and you know, Chinese or whoever you are, and if you have tried to escape poverty or make money or however, out of trade, there's a huge friction to it. And the one thing I want to leave away with you is that trade and tariffs is never just about trade. It's about investment. So when people talk about trade, when people talk about tariffs, they're talking about investment. Investment is being disrupted, right? If trade is being disrupted, investment is being disrupted. And we're going to talk about two kinds of investment that's being disrupted. But before I get there, I'll just talk about tariffs a bit. So I have a bunch of these charts because, again, people are so confused, right? Trump's doing this, he's doing that, and he's wild, he's tweeting, he's Truth Socialing. So this is a summary of what has happened so far. So basically, this is a value of exports to the US. I did it as a percentage of share of GDP, just to give a sense. But just to give a sense, Vietnam is exports is almost 100% of GDP. So when he's so far because the fact the US is integrated with Asia and the rest of the world, when he imposes all these things, he has to reverse a lot of them, right? And a lot of them have been exemptions, a lot have been pushing the deadlines. And the idea is that because American companies and Americans are so integrated with the global supply chain, and we start with the first, which is so deeply, you can only entangle it slowly without severely crushing itself, right? So we're all in this together, but it is being slowly entangled. So these are the products are being exempted. So it's quite a lot for some countries like India or Malaysia. It's like 60% for Malaysia that's being exempted, and on top of that, they have 10%. And if reciprocal tariffs goes away, you have higher numbers. But long story short, a lot of people think that it's gonna be negotiated anyway. So I have some estimates of impact on Asia. It's a very crude estimate. It doesn't go into an effect of what happens if you actually have the elasticity of demand can change, right? So this is using a very basic elasticity of demand, which is basically how sensitive you are to the change of price. Actually, before I talk about this, I want to talk about tariffs and how they affect, and when you write stories, why there is a disconnect between tariffs and the prices you see in the US. So example is China. China is a good one because US tariffs on China is basically roughly about 25%. For some sector, it's like 100%, right? Like EV. So it's roughly, let's say 25% before Trump starts on January 19th, 20th of this year. And then he had another 30%, right? 20% on the emergency one, fentanyl, plus 10% reciprocal tariffs paused until August. So let's look at effective tariffs on China, roughly 40, 50%, right? Effective tariffs, which means you take the ratio and you calculate it based on the value and you get kind of an effective rate, right? So that's a lot. But when you look at the prices, they haven't translated. So what happens? So let's say you're a buyer, US importer, you're a Chinese seller, right? So when you buy, let's say tariffs from before this year, 2024, the price was $100. Now it's 100 according to the tariffs. After you pay the duty, it's going to be 130, right? The thing is that you can actually, what happens, you can potentially, which we call a pass-through of tariffs, that you can try to negotiate for the Chinese guy to sell you for 90. He may or may not sell you. Of course, he's not going to sell you for 70 or like 80 or whatever the exact number exactly so that your final price would just be 100. He won't do that. But he may, if you're Walmart, because you're a huge buyer, you can probably negotiate to 90, right? Or 95, right? So some of that's offset. Then you take Walmart, because the margins are thicker, they can take some of that. And then maybe they'll raise prices so that fundamentally their margins remain the same, or they can cut some of their margins, right? So then in the end, when you go to Walmart, prices are not going to be 30% higher because some of it is cut here, some is cut here. So, and then another aspect is, of course, is the FX exchange rate and so on and so forth. But we're just thinking simplistically in terms of what happens when tariffs goes up and who has the ability to negotiate more. And the Chinese can be like, look, if it's too high, he can say like, look, my margins are already thin. I only have 1 or 2%. I'm not going to bother. I'm not going to bother doing this business at all. I quit. I shut my factories. Or I'm not going to bother selling to your market, right? So a little bit of all of this is happening. 1, 2, 3 is happening. So it is disrupting global trade. And eventually when prices rise enough, you're going to go to the Vietnamese guys who actually has lower capacity and cost probably was higher, right? So maybe before you were ordering from the Chinese guy for 100 and Vietnam was like 102 or whatever. But eventually when prices go high enough, it may be profitable to go here to import, right? And so on and so forth. Or if you think in the future tariffs will go much higher, and it isn't just tariffs, what about shipping? Right? What about these other friction in the sand that we're talking about? What about something I haven't talked about, geopolitics, right? What if there's a total ban and so on and so forth? What happened to Russia? There's no trade. So a lot of people say right after Trump. It's like, why isn't he not imposing anything on Russia? And he's just attacking allies because there's no trade. There's basically a central embargo. You can't impose punishment and there's no relationship, right? So long story short, tariffs actually, when you look at US CPI, and there's a number coming out this week, PCE, and so on and so forth, it hasn't risen that much. And I think a lot of it, and there is a disconnect, right? Between, again, the financial markets, which we read, and everything is mayhem, which is true, by the way. There is mayhem. If you're Apple, and suddenly your prices for China goes up 30%, there is mayhem for you. And Apple is a big enough company, and tons of people own that stock. So there's mayhem for the owners. And if you work in the financial sector, that's a big story. But fundamentally, when you go buy an iPhone, which you only buy once every whatever year, if the prices don't go up a lot, you're not going to matter. By the way, it's a luxury product anyway, right? The people in the stock market world, people don't even consider Apple and electronics. They consider it's like a luxury product. It's all about branding, you know. It's not really a handset. So anyway, long story short is my ears are hurting from this thing. So what are the Asians going to do about it? This is not good, right? So if you think about Vietnam on reciprocal tariff day, it's an absolute abomination of a disaster. We got 46% rate. China got 30. China is only 50 if you add 20% fentanyl. But China, after negotiating, we're talking about the 145 after they went crazy on Twitter and whatever. But the reality is China only got 30, which sounds very low now, right? If you think about it. Because after all that drama, we're only negotiating 10%. And then total is 30. But China literally got only 30 on reciprocal tariff day. So for Southeast Asia, they got the highest numbers, particularly like the guys like Cambodia, right? Very devastating because Cambodia doesn't have a lot to offer the world except cheap labor, right? And what it offers is the ability to assemble things for really cheap. But the thing is that Cambodia also have very lax ports where you can transship. So what Trump, again, we go back to Trump motivation. He wants to have the US importing less. He couldn't do it with just imposing tariffs on China. He decided, I'm going to make my problem yours. You know, if I can't solve it with Section 301, I'm going to make my import problem yours. And you're going to help me fix it, right? And then that's what reciprocal tariffs about. It's like, you know, if you ever read a book on negotiation, they say how to negotiate like a terrorist with a terrorist, not like a terrorist. If they ask you, they tell you, it's actually a good book for management. You should read it if you want to like move up in a company. Basically, it says a terrorist takes your daughter. He wants $1 million. How do you negotiate, right? The way you do it is you say, how am I going to get $1 million? So you make your problem his, right? Because like, you know, he doesn't know you have $1 million. How are you going to get it out to give it to him? So that's what Trump is doing. He's like a toddler. He makes his problem yours. He makes it, he's a good negotiator. But how good is it? Is that actually have leverage? You know, what if people decided that they want to give him back his problem? Right? So for example, well, maybe we'll give you back your problem too. You figure it out as well. So this is a problem for a lot of Asians. And a lot of them actually don't have as much leverage. China may have more leverage because it's a bigger economy. It may have other sources. But for a lot of countries that are very exposed to the US, like Vietnam, it doesn't have a lot of leverage. Can it buy a lot of Boeings, a lot of aircrafts, and a lot of defense goods? It can, but a lot of these countries, again, there's a reason they have a huge trade deficit with the US. So I think the trade negotiations are very interesting. And I think it has a huge impact in the region. And what does that mean? It means that people are starting to think that the US is fundamentally, if Trump gets what he wants, is not going to be the source of growth over the long period of time if he reduces the imports, right? But there is a huge problem with this. If you read any stories about Vietnam, it's the same story. We need to diversify, or China. We need to diversify. But if the US is the largest importer of goods, which is 4.1 trillion, right? Where are we going to sell more? But remember, if the US cuts up everybody else and the US becomes poorer, you can make a normative argument that this is bad for the US and so forth, irrespective. Let's say they actually do it, right? Let's just imagine that they actually from 4.1 trillion import 3 or 3.1 trillion. So we have 1 trillion, right? We need to sell somewhere else. Where are we going to sell? Europe, another rich country, right? But the Chinese are also doing that. So everyone is now trying to sell everywhere else with a shrinking pie, right? And I think that is the story of what happens. There's friction in the sand in global trade. And particularly with a lot of the countries are big traders, right? China is a big trader. Germany is a big trader. What are you going to do? And the second aspect I haven't talked about is on the investment side. I'm going to skip a lot of these slides. And I'm going to talk about, oh yeah, actually these slides are good. So it's about what are these Asian countries are going to do. So first, again, diversify. It's very difficult, right? So I whenever you talk to anyone, Alibaba, Temu, you go to Europe, the ads are out of control, right? People stop doing advertising with Google for anything because like suddenly there's no point. They're just going to ramp up the pressure on other countries. And a lot of the products are about advertising, right? You buy what you see with digital and so on and so forth. So look at the advertising space is also very interesting. So can they buy more American goods? That can be very limited. Can diversify? Of course, you can always diversify, but who's going to buy your stuff? And you have more competitions, the margins are being squeezed, right? So that's a big problem. India is a good country. To give an example, India is a great market, huge, a lot of people, it's growing. Let's go sell more to India, right? If everyone has the same thesis, suddenly the Indian guys inside India, I don't like it, right? So they have a flood of foreign people coming. Their margins have traditionally been good, and suddenly you squeeze out, right? So I think we have in this, now we have what we call like a race to the bottom. So instead of a pie expanding the global trade, we have a shrinking global trade pie if Trump is actually successful. He doesn't have to be 100% successful. He just have to be slightly successful. And we're going to see consolidation, which means there's deep deindustrialization. So the impact on this is maybe the US will industrialize, but the rest of the world, if you're not strong and you don't have a government that is a centrally planned communist government that controls the banking system like China, you're done for. Because if you're a little guy, you cannot compete with guys that take so thin margins and sometimes at loss because they get subsidies, right? So that's what's happening. So what can the Asians do? First, we already saw that. We cut interest rates on the monetary side. Fiscal policy gets a little bit bigger. But these are all just kind of quick fixes. They're what we call like cyclical support. And there's limited in what we can do. Again, I already talked about this, the fact that you're going to get more competition for a shrinking pie. And you already start to see that with US data, right? Is that there's a Fed paper, a Minneapolis paper, that basically asked about her questions. What happens to these tariffs? What should the Fed do? And I think in this paper, I think it's very interesting because something people don't discuss about is really what is the value of this import to the US, which is huge for other countries like Vietnam, which is almost like a third of its GDP in export to the US. Is what is that as a share of US GDP, right? So it imports 4.1 trillion, roughly about 500 billion is from China. So let's just kind of, US is roughly $30 trillion economy. In terms of actually CPI basket in the US, most people have non-tradables as their most costs, right? Housing, healthcare, and so on. So in fact, it's only 10% of the consumption is really tradable, right? So for the US and for a lot of these countries, it's actually negative. So when you read the news, a lot of people reading the news, and the news I read could be Wall Street Journal, Financial Times, or Bloomberg, and the news is fixated on the corporate's impact more than the households, and they feel very negative, right? And because immediately the financial system reacts, right? When you hear the tariff news on reciprocal tariffs, say stocks can fall very fast. Your prices at Walmart haven't fallen. They haven't laid you off, but things react very strong. So you could go and instead of buying lots of stuff with the same amount of money that you would have done last month, stop buying less, right? Because you think, well, there's two things I can do. I can hoard the stuff that's you think cheap now and more expensive than you. Let's buy as much as you can. That's what a lot of people did with the cars, right? If you think it's 25% higher before. But a lot of people also start buying less. And that's what's happening with US data, retail sales, and so on and so forth. And eventually, the front loading impact is only so much. And eventually what happens is that the stores have already hoarded all this stuff and they can't sell, so they import less, right? So the import numbers are already starting to show. And that's why I think in the third and the fourth quarter, the Christmas season is going to be very interesting, whether or not people are going to actually buy the trinkets they always buy, right? Because Americans are pretty wasteful. I don't mean to be saying this, but it's true. Every year you go and you're like, why are you selling so many ornaments? You buy them once, and every year maybe you add one ornament, but you always see the baubles, they're always on sale. So which means that you don't need these, right? Maybe you take out something from your garage and put it up, right? So that has an impact on us. So the trade volumes are probably going to be pretty decent at the second quarter, but the third quarter and the fourth quarter, as the US import less, and then you're going to see the earnings and so on and so forth. The third thing is, I guess the last impact is what Trump is asking. He's making his problem the Asians' problem, which is we want to move up our manufacturing capability, but we're not going to do that if we buy it for less, right? It's like rare earth. The U.S. imports about 100-something million rare earth a year, which is, if you think about the U.S. economy, that's a rounding error, basically. So why will we go through all this trouble figuring out how to do something that has very low economic value, but high strategic importance? It's kind of like water, right? Low economic value, high strategic in water. If you don't have it, you're dead, right? But frankly speaking, water is pretty cheap relative to diamond, which is not useful, So long story short here is that he's saying, well, look, we need to stop importing. How are we going to stop importing? The only way to do this is make it more expensive. But we can't make it too expensive that we go out of business as a country. We have to somehow jumpstart everything. Now, we're going to get the Asians to do it for us, right? That's what's happening with Japan and all these countries. And it's very difficult because in Asia, we have deep regional supply chains. The second thing is not even about trade. Even if the US is the number one customer, say for the like of Vietnam, and Vietnam imports intermediates from China, Vietnam has a bigger consideration with China, which is that China sits on top of it, right? So it's like your neighbor. You don't want to piss him off. You see him every day. He can do something to you, right? Or it's like a bad relation. So long story short, Asia has a very tough problem if this is the way you get out of these reciprocal tariffs and trade. So what I think the two impact of what's happening, what Trump is doing, is that if the tariffs were to stay, instead of, which is globalization, which makes it a lot of sense to kind of move things around, because moving things around is very cheap, there's no friction to trade, you're going to have more consolidation, what I said earlier, in terms of corporates, but also in supply chains becoming more regionalized. So instead of, imagine a car manufacturer which has a lot of parts, you import some parts, you ping, it goes all over USMCA and so on and so forth. If you face 25% tariffs, maybe you just take the whole thing. If you're going to pay tariff, you pay for the final product. So then you have a shrinking of trade in a different way. So you can have an expansion of trade in a free trade area, where there's deeper integration. But fundamentally, when you sell, you're going to try to reduce the friction. So the supply chains are shortening. And that you will see, and I don't know what the Harvard thing is doing, but if you look at in the longer time horizon, you're going to see that things will start shrinking, and there will be more deepening of regional. And that was happened in Europe as well, because Europe is like simmering. Relationships with Asia in terms of particularly China is simmering, which also will create this deepening of regional supply chains, but also in a way shrinking global supply chains, right? So some people coin terms like nearshoring, onshoring, whatever the case is, but that's the way I would think. And that's why I kind of make this chart, right? Just to kind of show you that this is not going to be disrupted, but it's going to be rejigged, and the arrows will flow a bit differently. Actually, no, I said this is disrupted. It's just going to be rejigged. Regional supply chains will remain. It's going to be rejigged. There will be a bit more in India to sell to the US market and so on and so forth. So you have a deeper regional supply chain rejigging with the center being China, less so, but more centers. So we already discussed about investment flows. I think the FDI story is pretty well told, but I want to talk about diversification, right? So one area of trade, of course, is supply chains. It's supply chains. When we talk about supply chains, is investment, right? To make something, you need to build the factory. To build the factory, hire the workers. A good example is despite of China's rise in exports, about 30% of China's export is still foreign owned. So there's a lot of outward FDI, but the stock remained. It's just the share of Chinese is rising, so that share is shrinking. So I do think that there's going to be a lot of disruption in these factories being moved, and I think there's going to be a lot of regionalization also in the U.S., deepening U.S. with Canada, and something I haven't talked about yet. But I think there is something that's happening as well, which is on the portfolio side, right? Which is the capital that's moving around, and how we're going to recycle this surplus in Asia. As I mentioned, there are two themes that's diversification and investment is happening, which is which is just don't look at it. Just like let me just build a narrative, and we'll talk about the slides. Is the idea that it's a very China-centric supply chain and a US-centric financial systems, and these things are being shifted because of the sands and the investments and the relationship from tariffs, but also something else, geopolitics. And there's also the US side, right? There's a center of gravity. There's a reason why things are happening in China, and there's a reason why everyone's investing in the US. But everyone has come to the consensus that there's too much of a good thing. It's too much of a good thing to buy everything from China, to have every China produce something. It's too much of a good thing if everybody buys SPX and US Treasury, right? There's a consensus. But the question is, how do we get there? And what costs, right? If we diversify out of China, that means there's a cost. You have to set up new factories. You have to reshuffle. If you diversify out of US assets, there's a cost. US Treasury is high yielding, is pretty safe. Even if it lost its AAA, it's still AA. Remember, France is only single A, right? If you buy Indonesia, it's barely investment grade. It just got past it, right? So like when you diversify out of US assets, you also need to buy something else. You can buy something safer like German Bund, but it yields less, right? You can buy Japanese yen, but it yields less, right? And so on and so forth. So there's a big reshuffling. And I think the rest of Asia is going to benefit. The rest of those that have a harder time having an investment thesis will have people look at you better. Even China, like as an investment thesis, if you go and try to pitch China before Trump trade war was very difficult to do. After, it's much easier. Because because China is an investment thesis in terms of diversification of supply chains, but it can be a diversification in financial assets, right? It's like a totally two different thing. Except if you're a US investor, if you're European, for example, it could be an interesting, and so on and so forth. So I think those are also two key themes that's playing out. It's like a difficult theme because it has costs. And the cost calculus will tell you that it will happen pretty slowly. The second thing is that if you buy too much of something, you appreciate the asset very rapidly, right? And when you appreciate the asset very rapidly, then I'll give examples bonds, right? If everybody's buying Indonesian bonds, the depth of the capital market is very limited. Just give you a ballpark, Indonesia is a one something $1 trillion economy, 1.4. Debt of government debt is roughly 30-40%, right? So we're looking at a roughly $500 billion max market, right? And U.S. Treasury market is in the 30 trillion. Because if the U.S. economy is 30 trillion and debt is almost 100% GDP, roughly 100, right? So like if you move, you start moving, and you move, and suddenly you have everyone trying to buy stuff, and it becomes more expensive. So then what happens next? Then you have risk building, right? So you're buying something where the more you buy, the prices go higher. so on and so forth. So investors have this issue in diversification out of the US, and that's a real consideration. And that's why I think the trend is happening. It's going to happen much slower. And that means that the sell-off of the bond market, US bond market, for example, will find buyers. Just like the sell-off of the Indonesian market will find buyers. And the financial crisis is actually not as near as you think. So even if we have trade war, which is fracturing the world and disrupting things, and Trump is wild and erratic, on the financial asset side, the storm is not brewing as much as you think, right? It can cause volatility. There's a difference, right? You can ride in a storm. If you go sailing, you can have severe wind. But what matters is in that volatility. It can be very, very exciting, right? You don't want to be sailing with no wind. You're going nowhere. You're just kind of stagnant, just hanging out in the water. So you do want to have some wind. But too much wind, too much volatility can create a lot of problems. You can actually crash. So my thesis here on the financial asset side is actually when you read the news, and I give you an example of a country I cover, which is Indonesia. Like there were in February, March, huge articles on IDR, Indonesia rupiah collapsing to Asian financial crisis. And I said, it's fine. That was 1997. That country has been slowly depreciating. It only took a little bit, like 50 basis points to get the Asian financial. Rupee is another example because Indian people are super negative India. So the rupee is also always depreciating to all-time high because it's depreciating every year by 2%. That's what the central bank does. It doesn't like a strong currency. So of course, it's always depreciating to all-time high. But if you look at the currency, it's only depreciating by 1.5% per year, which for an EM is probably not catastrophic, right? So that something, basically, it's like what I'm trying to say is that because it's harder in the financial market side to completely abandon a market, right? You can sometimes, if it is no longer a viable investment thesis like Venezuela, but somewhere like Indonesia, sitting in Asia with its flush cash, when Chinese government bond yields are sub 2% in the shorter end duration, the entire, and there's not enough juice there, right? And your profit margins are thin, you will get bidders. There will always a Chinese bank that will buy, or a private bank that will buy some of this debt. Just like you will find buyers of American debt at a certain level. So in financial assets, there's great trends going, but it's not gonna be going rapidly, right? We can't from overnight diversify the entire financial system or global trade. Is that I think he wants to cut me off because my time is out. Okay. You know what? We can actually take Q&A because I'm tired of talking. I'm just using your excuse. So I'm just showing some charts actually of allocations, foreign allocations. So if you look at this, like the allocation of U.S. equity is something that's very interesting, right? In 2018, when Trump was president, people started buying lots of it, and by now they have lots of it. So there's too much allocation, right? So now if you're gonna sell out this much money, you have to find something to buy, and you have to say who is a willing seller of these assets. A good example, I'll tell you, euro. The euro is now 1.16 with the news this morning. The euro is the perfect asset to buy at the moment. Why? It's not the US, it's not China. It's developed enough, right? It's safe enough. It has liquid. It is kind of like a neutral, guys. It's always playing itself as the good guys. It's always a victim of something. There's always China beating on its trade, or the US. There's someone, and then there's the Middle East. So the euro is a perfect little asset. And the problem is you can have too good of a good thing, right? Just think about Euro stocks is banks, so that's fine. But let's imagine banks kind of like volatility, so probably going to do well in this environment. But let's imagine if you actually sell real stuff, a shirt like Zara. Before, 100 euro was 100 euro versus whatever, but now 100 euro is 16% more expensive. It's now cheaper for you to buy European goods in Hong Kong because Hong Kong is the dollar than to go to duty-free Paris because it's 16%, right? VAT is only 10% or something, depends on the goods, I think in jewelry, whatever. So long story short here is as you are getting, in a way, a tariff as a European exporter. But it's not a real tariff, it's just an FX fluctuation that's hurting your bottom line, and because your earnings are euros. So I do think that there's a reason why, and I think a lot of countries are gonna find out that this privilege, this thing, this rant, this Moran rant, this Trump rant, which is we have lots of people investing us, appreciating the dollar to the point that at one point the euro was in parity with the dollar, right? The yen was 160. The dollar was so strong, you know? I mean, it makes no sense for Americans to do anything but buy stuff. Go to Europe. Well, there's no point. Like, there's no point doing anything. It's so cheap, right? So then what happens to your export? It goes down, right? Except for some sector. So people are going to start to figure out as well that too much of a good thing, there's a burden. And I think that's another big question beyond is, what is China going to do? Is it going to want this? Right? Does it want to have the responsibility of the U.S. to secure the sea? Does it want the responsibility of the dollar? And I think many people are going to come to the conclusion that probably not. So the change we're seeing is probably going to be much more gradual than people think, in my opinion.
Thank you. Thank you so much for your amazing presentation. I'm Amy for the New York Times in Taiwan. I have a question about the recent appreciations of currencies in Asia.
Yeah.
How do you think this will affect the things you talk about? Can you give some assessment?
Okay, so the appreciation is like some people say, of course, for Taiwan and a lot of the Asian currencies can only appreciate if the central bank allow it to, right? Central bank can always intervene. They can intervene by building up reserves and sterilize the currency and so on and so forth. So when they let it appreciate, the question is how much more, right? And I think the second one, of course, is the NTD is appreciated very rapidly, very fast, but kind of stay at that level, which again goes to show, unless the yuan, and I think this is where I think it's a big story, can the NTD rise against the yuan too significantly? And the NTD, of course, Taiwan has a lot of sectors that have at the technological frontier, TSMC and so forth. But even that is going to cut into the margins. They're going to have to get the suppliers to squeeze the margins of the suppliers and so forth. And it gets to a certain level, it's going to start impacting earnings in NTD, right? Because TSMC sells to the US, TSMC sells to others. If others appreciate as much as them, then it's neutralized. But the reality is has not. There's only 3 currencies. A lot of the North Asians have done a lot of appreciation. The JPY, which actually depreciated and then appreciated again to 145. So it's actually moved very flat. And what the BOJ is doing is very interesting, right? They haven't hiked anything because they realized that, again, too much of a good thing. We can't do too much. We can't really do QT on the longer end. Even the tapering will continue in 2026. So long story short, I don't think there's much more appreciation of the Asian FX if the yuan doesn't move. Because if everybody moves versus dollar, because the dollar is kind of like a reserve currency, it's kind of an anchor, it kind of gets neutralized if everyone does. But if all the competitors, the North Asians move, and the yuan barely moves, if you look at the yuan versus dollar, it barely moves, then your relative game is lower, right? And I think from that point of view, the Asian FX, the Bank of Korea already mentioned that it's going to watch the won. I just published a note like last week on this particular issue. Can the Korean won rise against the yuan that significantly? It's risen about 6% higher. It's much higher in dollar. The answer is no. For all the things I've mentioned, right? And Korea is a little bit, Taiwan's a little bit less because you have something that everyone kind of really needs. But Korea has memory chips where it's got people kind of encroaching on it. It's got ships being eroded by the Chinese. It's got a bunch of industrials being eroded, like the chemicals and whatever. If you look at Korea's relationship with China, it's gotten really bad. Like, its trade balance since 2023 went negative. It's one of the few countries that had a trade surplus. It went negative in 2023, and it continued to go negative. And the reason it goes negative is bad as well, is that imports are rising and exports are declining. So which means that your industrial sectors are slowly being deindustrialized. And the one place where Korea has done pretty well is exporting to the US, right? So on a net, if you look at Korea's numbers, they look pretty good. And this is where Korea has a problem. But Trump is like, no way, Jose. We have 25% auto tariffs on Korean goods, even though we have an FTA, right? So that's bad. So for Korea, that there's a big problem. The currency appreciation adds to the problem. China PPI is minus 3.5% deflated. That means that compounding all the deflation China has had, plus the appreciation means you're uncompetitive pricing-wise. We're not talking about the quality of the product at all. We're just talking about pricing here, right? So I do think that for the Asians, they watch the yuan like a hawk. If the yuan, the PBOC is watching the yuan like a hawk as well, right? And it's not gonna let that go, I don't think. This is like probably one of my bigger calls is I don't think the yuan is gonna be depreciated against the dollar massively. So that's why the euro is an exceptional story. It also stands out like a sore thumb. Because what that means is it's very attractive if you compete versus a euro product, because they're much more expensive. And your goods are now cheaper, so you can sell into Europe. So they're losing in their market and in third markets. So I do think we have basically a global currency war. So people think the big picture is the dollar going down, but it's not. The dollar is just an anchor, right? It goes up when, like, you know what I mean? Like if everyone depreciate against the dollar the same way, or everyone appreciate the same way, it's not a big story because it's just a cross. But actually, what's interesting is the cross between the yuan and these big traders. So I do think that it's a big problem for Taiwan. If it appreciates further, they would have to intervene. At some point, the euro, they'll have to intervene, and I think 120 is a cap. Some people call for 140. I think if the yuan doesn't move, going to 140 is industrial suicide. Right? German cars are already uncompetitive.
Thanks, Trin. Soo-hyung from Bloomberg News. I cover Korean economy and government.
Great.
So I remember one of your slides say Asian countries need to do as many trade deals as possible, but you also said they really don't have any leverage. That's what I'm hearing when I meet with Korean government officials. So
Yes.
what do you think, like these Asian countries, smaller economies, how can they approach these negotiations? And what would you say a good deal for Asian countries would look like when they're...
For sectoral. So I have, look, countries are very different. It's like all trade not equal for Korea. Auto is important. Auto export to the US, chips and so on and so forth. You look at the UK deal, it's sectoral, right? The UK took 10% hit, but they got the sectoral quota, which is basically the same level they traded with the US. So I would try to get sectoral. Like, I think that's what, if you read the Japanese, that's what they're doing. They're trying to get, they're going to probably, you go for what you must have to survive first. And then you give up the little guys, in my opinion. And then you buy time. So I do think that for Korea, sectoral is important. They already have, Korea faces a big problem already, which is the way Korean companies, and this goes back to the Trump. So Korea is turning into America in a way, is that the big companies like Samsung, Hyundai, and even the solar companies have done basically FDI to the US. So if you look at, we have a lot of these charts, their deployment to the US is massive, and their Korean companies are behind the imposition of solar on Vietnam recently because they have deployed so much capital into the US. And what a lot of the American companies did was that when Trump imposed tariffs on China, they started importing from Southeast Asia, right? And the Korean companies were the first to then file this lawsuit with the Department of Commerce that successfully imposed thousands of tariffs on these Southeast Asian companies because they want to make sure their investment in the US bear fruit. So even if the Korean companies do well in terms of arbitraging with FDI to the US, I think Korea has a problem in that if everything is going to be produced in the U.S. via outward FDI, Korea is going to lose jobs in autos, is going to lose jobs in solar plants, and so on and so forth. Fundamentally, they need to find out a way to somehow have jobs in Korea. Selling to Koreans doesn't work because you have fertility that's very low. So you have to sell outward. Where you know, Korea is big in one of the big IPOs. I think last year was in a Korean auto company in India, right? So I think for Korea, they need to find a market that's like the opposite of their market. They need to try to preserve some of the sectors inside Korea because you need an anchor for your industrial sector. And I think some sectors that can be big winners, like shipping. Shipping is if China, if the U.S. is going hard on China, they need Korea for naval ships, for commercial ships. They can use leverage on that. But fundamentally, I think the Korean growth model, even before Trump, was cracking. And I think after Trump is very challenging. And so the president, the new president, President Lee, is going to have a lot of work cut out for him. But I think the answer is probably even more subsidies to compete, and also watching that Korean won like a hawk. But in terms of negotiations, it needs to go for sectors. Go for easy wins of sectors, probably settle for 10% tariffs, but make sure that you get a preferential sectoral that you care about, access to the US. Because if you look at, and I wrote this in my trade, this is an area where Korea is doing well, because it's able to sell to the US without China competition, right? So it needs to maintain the U.S. market, in my opinion. But how it does so needs to probably sweeten Trump's ears a bit and get some of the sectors it needs.
We have a question, Robbie. Go ahead.
Hi, this is Ravi from the Indian Express. So I wanted to understand your views on India as an investment destination. You know, you were talking about trade deals. India has skipped joining the RCEP, the China-led RCEP, and we're trying to sign deal with the European Union, the US.
Yeah. I have that slide here somewhere.
All these Western countries. So how do you think it is going to pan out? And also, you know, we are opening up perhaps for the first time our automobile industry. Like you mentioned, it's an anchor for the industrial base. So are these deals right decision for India, because we already have a lot of deficit with China? We're already importing a lot more than we are exporting. So what is your
Okay, so I think India is very interesting. It's interesting, like, okay, we start with its relationship with China. I think it's interesting. Because of course, as you know, India and China had a border dispute. They never call it war, and they avoided using any weapons to avoid calling war. So they even used like knives to fight at the border. But that got really calm recently. But as a result of this border dispute, TikTok got banned, companies got banned, and investment and people. There was like, it's impossible to get a visa if as a mainland Chinese going to India, right? Just like being a Pakistani, basically. But worse if you're Pakistani, probably, because you have to declare your ancestors. But long story short, there's no relationship in terms of people mobility and investment, but it has this widest trade deficit with China. And that relationship is even rising and rising, rising. And this is something I ask every time I meet an Indian government official, is that, how do you think about that? Because in a way, it doesn't get any of the benefits of investment, but it gets a bunch of trade, right? And as it try to, in this aggressive Trump 2.0, and I think India can be a big winner relative, because if you look at that chart where I map out the linkages, India is kind of far. But it still needs to import the components, and many of these things are Chinese. So then there's a question. And I think India has a philosophical question beyond all of these things, is how it sees about the outside world. Because India obviously has Pakistan, which is a big security issue, which is obviously many people before are Punjabs and basically just Indians, so got split. And it sees the world in a very suspicious lens because it sees security problems. If you ever try to enter India, you know, they ask all kinds of questions. I've never entered a country where it's very like so severe, right, in terms of security. And when you go to the airport, you know. So there's this fear, the fear of the outside, the fear of the inside, and that fear is in trade. I talk to officials and they say, well, and I said, how come you don't like do this and this and this and this and this? And they say, well, if we let it in, then we can let the bad in. There's a fear. There's a fear of the outside. There's a fear of trade. But I think that fear has declined. And there's another fear, which is the fear of missing out, the FOMO, is that we miss out, right? So I think there's that philosophical debate, the fear of the outside, and we kind of, things are going better, but not great. But as China, and I think that conflict with China, which I go back to, is why it's an important one for India and why I think it's changing, is that China's rise isn't about China positioning as an investor destination and so on, but it's a security threat. If you look at what Israel and Iran and what happened, in a hard power world, if China decides to actually invade, if you are not a strong industrial power, right? Like look what happened to Iran. Look at a lot of these countries. The lesson here is that you must industrialize. It is not about even choosing sectors to grow, but it's about survival. And I think China's rise, in a way, I think it's helpful, even if it introduces a low element of fear. And China's industrial and military ambition, in a way, is also helpful, is that India also has to be. So what that means is that they need to find a way to exit this fear of the outside. And I think, in a way, Trump is accelerating the opening up of India, maybe vis-a-vis the US, and very slowly, probably with the EU. So they're entering this late, but I think things are very much changing in India, the way people think, because of the reality of the world we live today is that you can't be functioning the same way when your neighbor is already industrialized at great speed, militarily, right? And then the fighting between Rafales, the French Rafales versus the Chinese aircraft show you that, right? And they can build a lot of these things. So I do think that for India, they're going to open up very slowly, but very rapidly over time, and they're going to probably start with the bigger countries, EU and the US. Yeah.
Thank you so much for your presentation. And before we move to other countries, I'm Nilantha from Sri Lanka and represent Sri Lanka Guardian. I just want to get your advice about the case in Sri Lanka. Probably you know that we went bankrupt a couple of years back, and we now slowly but surely coming up, but our economy is still on the knife edge. So with the help of the IMF and the creditors and all, we got the grace period till 2028. Right after 28, we have to pay back. And how a small country like Sri Lanka can prevent going back to the bankruptcy, and what is the role in this situation? You probably know that we got the 44% tariff from Trump's as well. So
yeah, sorry, my eyes are bad. So I just want to get your name. Nilantha. Okay, sorry. Yeah.
So I just want to know what your advice is.
Okay, thank you, Nilantha. God, you're trying to get me to solve your country's problems. Make your problem my problem. I'm just kidding. No, that's a joke. Yeah, I know. That's a big one. Let me just give you a simple cop-out: diversification. So I think one of the things is that Sri Lanka has got tourism. It's got two problems going to crisis, right? Very similar to Pakistan. Is that we got COVID. Sri Lanka before COVID was on its knees. COVID completely annihilated tourism. I'm not a Sri Lanka expert. I'm just like kind of shooting what I know, right? And just macro hats. And then you got the energy crisis, right? And it's a classic balance of payment problem. Tourism is how it earns its foreign earnings. You gotta have more than that, right? So if you ask me if I were to be your leader's advisor, I would say diversify your basket, your earnings in tourism, anything. Just countries that diversify when all these crises have done better, right? Vietnam's example where they had tourism, it got annihilated, it still got manufacturing, so on and so forth. You have some savings for buffers. energy is a bloodline of your economy. You need to figure out how to diversify your energy supply to meet the demand. If your energy source is LNG, you're in trouble if the Europeans are buying it, pushing it up higher. Only LNG. If your energy supply is only renewable, you're in trouble if suddenly, if you don't have the grid to distribute it, you can have too much of solar, you can have too much of wind, or you can have very little. Like Vietnam, hydro was great, suddenly it dried up, right? And also it hasn't invested in the grid to distribute all of this. So I would say the simple answer is diversification of sources of income and so on and so forth. But frankly speaking, you can't do any of this if you don't have the right politics, so the right people. I mean, I can't solve this, the right, not just the leader, but the bureaucrats, the technocrats, build some institutions to kind of, a good example, I would say Thailand is a country that's been on its knees for the people leading, but the technocrats have been decent enough that it's not like devolving. It's just a burning crisis. It burns slowly over time. Because they still have decent people at the MOF, the BOT, the airport still works, and so on and so forth. So some people think Thailand is a basket case, but I would say for an EM country, it's just not done too badly that it's been in an ongoing political crisis since the 2000s, right, when Thaksin got removed, So in that way, I would say build some institutions to solve the problems I said that will endure. So I think not to sound like someone who's brainwashed by DC or US institutions, but I'm a big institutionalist. I think if you're lucky, you get a great leader like the Lee Kuan Yew type or whatever. But a small place like this is different. But in a big place, you need the institutions to hold to solve some of these problems. And we can only solve problems that we know that we don't know, right? We haven't thought about the problems we don't know. So in this crazy world, you're gonna find yourself where instead of using soft power, you have hard power. So I don't know if that helps. Push your government to do more to attract FDI. Push your government to do more to get other than tourism. Tourism is an easy winner because Sri Lanka is beautiful. It's got tea. It's got good food. It's got sapphires. It's got, I know I keep talking about jewelry because I'm obsessed with it. But I'm just I've never been to Sri Lanka. But I think that's an easy sell, right? But you need to have more than that. And people could choose to go look at it and not spend any money. Just exactly what's happening in Hong Kong. You can have a beautiful place and a beautiful whatever, and the mainland come and they now just take pictures, literally. They go in front of this French club, they take pictures in front of and I'm just like, seriously, you need to buy something. There should be a tourism tax, because eventually it's tiring, for the local shops because they're so expensive. It's been dollarized, right? So there's no reason people buy anything. They go across Shenzhen, it's cheaper. So they just take the pictures and they go back across and they buy all the goods there. So tourism, in my opinion, I'm not a big fan as a growth model at all. Because it's so volatile.
So I think we're going to make this the last. So I promised Trinh this would be an hour, but she's been generous.
Oh, it's more than an hour?
Yeah.
Oh, goodness me.
Thank you. Given that you talk about Thailand, so
Okay.
Frank from TBS, I just want to understand how does the acceleration of regionalization help amid the global trade disruption? As in, of course, in ASEAN, we always talk about intra-trade promote for that.
Yeah.
And right now, Malaysia is promoting ASEAN, GCC, China,
Yeah.
about the relations. How does that really help? And Thailand actually is trying to forge their collaboration FTA with EU too. Right now, I think today is the starting point for the sixth negotiation process stage. So how does that regionalization block to block to help at this moment?
It doesn't hurt, right? I would say. Like I mentioned, if there's friction to trade to the US, fundamentally, eventually you're going to export the final product instead of the intermediate. That's the one impact. Regionalization helps because you reduce frictions, you become more competitive. But I think it's actually been pretty well. We have already been regional ASEAN as the center of a lot of free trade agreements. The issue with the region is non-tariff barriers. They have this ASEAN meeting where they're like, we're going to reduce the last 1% that we have friction on. But the problem with us is not tariff barrier, right? It's the non-tariff barrier in terms of people, mobility, and so on and so forth, right? So I do think that, and then fundamentally for ASEAN and then also China, many of these countries, it's very different than the EU, is that it's created to protect the sovereignty. It's not created to deeply integrate, to subordinate ourselves to the greater dream. There's no ASEAN dream. If you talk to a European, they have a European dream, you know? No, I'm serious. Like my boss is from that generation. She's got that dream, you know, it's from the 60s, post-war. They make movies about it. They try to create this identity. There's no ASEAN identity. You know, it's a made-up acronym, right? So I think it's deeper. It's different, right? You know, Thailand, Burma. Does Thailand feel any responsibility towards Burma?
Oh, okay, yeah.
No. It just sees it as a tourism liability of the like, you know, causing the Chinese tourists to stay away because of the kidnapping. You know what I mean? Like, so I do think that we don't have that deeper vision of integration. Maybe it's a good thing. Maybe it's a bad thing. Irrespective, we're going to integrate the easiest way possible. I do think that within ASEAN relationship with China is deepening a lot, partly because of China's focus. Traditionally, the way China did our FDI was to get what it didn't have, which is a country that doesn't have resources in Latin America, Africa, Australia. And then they realized that, okay, now that I got this stuff, I don't have influence in my backyard, so to speak. People hate it when I use that word. But I think it's like a kind of like a easier way to envision it, the way they think about it, right? And then they start like going into Southeast Asia, where the Japanese have traditionally. And so I do think that because the will is there, and it sees that it's the easiest non-friction expansion of relationship. There's friction with Korea, there's friction with Japan because they're allies, you know, not just in allied countries, but actually militarily, right? And also they compete, whereas in the ASEAN countries, it's easier to kind of enter in a divide and conquer kind of way. Whereas Malaysia argues for deeper relationship with China in a self-interested way. There isn't a cohesive ASEAN message regarding anything. No one's looking out for the Philippines' little ship ramming with China, you know? They have zero interest. Thailand is interested in protecting its tourism, right? So on and so forth. There's no bigger ideological vision. So I think there's a limit to it, if that makes sense. And I don't mean to be pessimistic, just realistic, right? So yeah. And I mean, there's a Cambodia-Thailand dispute ongoing that's brewing potentially a coup, right? So yeah, I'm highly skeptical because I know how they think. They don't think the purpose of ASEAN is to subordinate these countries for a greater good. The purpose of ASEAN is to fight communism, which no longer is a fight, and to somewhat promote us, but also protect sovereignty.
I think we'll have to end it there, unfortunately, but I want to thank Trinh for her time and sharing her knowledge with you. I think we could have gone for a couple more hours with your energy and the questions in the room. I think we could go longer, but thank you so much for doing this. We really appreciate it.